Hey everyone, hopefully you're having a good day. My name's Andy, my channel's Finding Value. If you like making money, this is the channel for you. Click subscribe. We invest in undervalued assets, the most undervalued assets in the world that we can find. And if you like this content, give me the thumbs up. Let me know what you guys think in the comment section or if you have any questions. You're going to lose me. I'm going to go over an article here. It says a new commodity supercycle has begun. I'm going to read some of the highlighted stuff here. We believe that the last supercycle peaked in 2008, which it did, after 12 years of expansion, bottomed in 2020 after a 12-year contraction, and that we likely entered an upswing phase of a new commodity supercycle. Here is oil. This is the last oil supercycle and its drivers. You can see a very large increase and then the very large sell-off. But they think it is bottoming and we are going into a new supercycle. It says the new commodity upswing, and in particular oil upcycle, has started. And it says potential drivers of the new commodity supercycle. They've got all these: end of pandemic and reopening of economies, uptick in global economic growth. They call it the Roaring 20s. End of trade war and manufacturing recession, ultra loose monetary policies across the world, increase in tolerated inflation, weakening USD, fiscal measures, infrastructure, so on and so forth. And they talk about the metals and the battery metals and whatnot. So yeah, let me go down here. The reason is that 12-month momentum, this is for oil, turned positive on oil, and going forward signals will remain solidly positive, which is the only sector that still has a strongly negative momentum signal and is hence heavily shorted in the context of factor investing. We'll need to rebalance in March by closing 20% of its allocation to energy equity shorts and adding 2% to energy longs for a 22% net buying in energy. And basically what they're talking about is the rotation of money. That rotation of money is coming back into oil, is what this article is basically saying. Here is the 12-year upcycle, the ratio of energy sector S&P 500 member shorts, left axis. This is a lot less shorting versus what it is on the right-hand axis. So everybody's shorting this stuff. And they're basically saying that there could be an epic short squeeze at some point because they're going to have to unwind all this. Hence, you get the rotation of money. That's kind of what I talk about in other video clips. They're saying it in this article. There's another flow factor behind the supercycle is rotation by discretionary funds and retail, the rotation of money. Any retracement of this decline on a U.S. equity fund asset base of $14 trillion would result in significant inflows and repricing. That's that rotation of money. Given that equity assets significantly increased over the last 10 years and the energy sector significantly decreased, even a small rotation could produce an outsized move. And I agree. This is the energy allocation over time. Active allocation and passive allocation. It's all decline over time until we hit a new paradigm where people start investing in commodities. I think that's where we're at today. And you're going to see a bunch of money rotate in. It says finally, retail investors also reduced energy equity allocation from 4.4% to only 0.6% currently. Go on down. So that's the big gist of this article is we've got a commodity supercycle coming. They think, just like I think, that you're going to see a rotation of money away from stocks and other things into commodities because of the market conditions, and that those conditions are coming into a commodity supercycle. We've got a weakening dollar. We've got increased inflation. All of those things are coming, according to this article. So are you guys ready for the commodity supercycle? What are you invested in? Put it in the comment section. Let me know what you think about this commodity bull market. Do you think it's going to be large? Do you think it's going to be something that takes time? Do you think it's 4, 5, 6 years away? What I think is that it's happening right now. I think we're just seeing the initial moves off the bottom. Everything on a ratio basis is still extremely cheap. So I would still be slowly cost averaging in. I don't see any signals where this thing is anywhere near overvalued state. And I think it'll last about 10 years, 12 years, something like that. I usually say 5 to 15 years to cover myself. Depends on the real estate cycle, because if you lose the real estate cycle, things will blow out for a crash at least. Doesn't mean that the commodity cycle would be over. It just means that it would crash out. And I think it will signal that it would be over. So, but it is highly linked to real estate and the housing starts, because that's where your inflation really comes from, at least in my opinion. If you guys like this content, give me a thumbs up. Subscribe to the channel if you haven't. And thank you for listening. This is Finding Value.